Alright guys, a friend reached out to me recently asking me for my take on the euro against the Canadian dollar, and honestly I haven't looked at this chart recently for a long time, right? So I thought about it. I was about to do a quick answer to that question and then it crossed my mind. Why don't I make this video where you and I can all go through the entire process? We're going to go through the whole fundamental analysis, the technical analysis, and then at the end of this video we're going to have either a stance of buy, sell, or just stay away from this market for the time being. Either way, I'd like to see you all in this. Grab a cup of coffee and join me as we analyze the euro against the Canadian dollar. Okay, so we're going to start by looking at the fundamentals of the euro against the Canadian dollar, and right here we can see the CAD on the top level and the euro on the lower level. So the Canadian dollar, we have the central bank's information for both of them are both flat. On GDP, the euro is winning. On CPI, they're both flat. On the unemployment rate, well, the Canadian dollar is winning. The Canadian economy is doing way better, right? For the retail sales, the euro is winning. For manufacturing, now this is a sweet hands down, like it's really beating it hands down, real hard. Well, for the service PMI, both flat. In terms of unemployment, the employment change, well, the Canadian dollar is doing better. The Canadian economy has better employment currently, employment change. The producer price index, we have the euro winning slightly there. And then for the weighted total, we say the euro is economically slightly better than the CAD, right? Meaning we're hoping that the euro against the Canadian dollar, there's a tendency that the euro has a better fundamental stance compared to the Canadian dollar. All of this is simply just because the only thing the euro is losing is employment. Apart from that, they seem to be having better stats almost all through. Let's see if this is going to pan out in other aspects of markets. So we have the COT data telling us that we find the commercial traders pumping a lot more long into the euro. And the change recently is they are even pumping even harder for the Canadian dollar than they are pumping for the euro. And we see the exact similar opposite on the retail traders. Retail traders are shorting the Canadian dollars and longing the euro. But also something funny is the retail traders are going even more bullish on both sides compared to the week before. Now with all of this knowledge, let's just simply filter out for the euro against the Canadian dollar right here. So this already does like the major calculation, makes it simple. You can see every single thing at a glance, right? So right here we have the weighted average giving us 50.4, meaning we're slightly bullish in this market, not strongly bullish. I mean, the rating here, my rating system here only calls bullish when we have a 60% and above. So we're currently 54% into this currency pair. Hence, we are leaning fundamentally towards the euro than the CAD. However, the commercial traders are leaning heavily towards the CAD than the euro, and you can see a stark difference compared to the retail traders. Right here you can see the retail traders at 57%, and then the summed weight is saying, well, this is slightly neutral. You do not want to dive into this market. So this is all for the fundamental aspect of the market. It is quite small, quite simple, quite okay. Fundamentally, we're already seeing the reason not to just jump into this market anyway, not just jumping into it on the higher time frame, right? So it means if you want to trade this thing, you should be looking at the lower time frame. You should be looking at intraday trades and scalping, most probably. So let's go in and see that. So diving into the technical analysis, I'm going to load up my broker right here. It's coming up. Give us a second. All right. Right here we have my broker. Just like we had a trade in the euro card, the USD card, let's take into the euro against the card. So you can see my chart is fresh, still has the same 4 indicators, all zigzag indicators basically, and they are all for one reason, right? We're going to look at this market in a totally different light. First and foremost, this is the monthly time view, and in the monthly view, well, first thing first, we have a monthly break of structure right here. This is something you should look out for. Now, it means we just crossed a possible supply zone. There should be a supply zone somewhere around here on the monthly that we just breached, like we really breached it. But that doesn't mean the market is bullish, right? Since we can't be trading on the higher time frame, I don't think there's a need for us to go through all the weekly, the monthly, the daily. But however, let's just go through it for anybody who's on this chart who really wants to trade, you know, those time frames. So looking right here on the weekly, I have a very tiny weekly structure up here, very tiny one. Again, people think the zigzag indicator is going to show you everything, but the zigzag indicator is nudging you towards the situation. It's nudging you towards the market structure. So we can see this large break over here on the weekly. So this is the weekly break of structure, and on this weekly break of structure, if I should take out this measurement from the low to the high, you can see we do not have a good demand zone. Basically, we don't have a good demand zone. We have a demand zone right here. And why do I say it is not a good demand zone? Well, it is simple. If you understand Fibonacci retracement and supply and demand, I would say clearly this is a market that on the higher time frame, as a weekly trader, you do not have a demand zone. For the weekly time frame trading, you do not have a demand zone because this zone is sitting well inside the premium area. So on the weekly, there's no demand zone. But we can further go into the daily using that structure. And you can see the exact structure I had drawn, I had looked out for, is what is being looked out for right here. And I can see the structure right here all the way from this low leading to this high, which is what I prefer, not this low going to this high instead. So I'm looking at this low all the way to this high, seeing that large break of structure. I'm going to be looking for demand zones from the highest point here. So we have one right here. Like I said, this is not a demand zone as far as I'm concerned. It is still breaking into the premium areas, and I do not have any demand zones in this market. For supply zones, well, there's none either. So it seems the fundamental really said the truth about this market. On the higher time frame, it is messy, very messy. For the 4 hours, for 4 hours traders, well, in the 4 hours we've had beautiful structure, clean, good structure, right? Really good structure. But we had this break right here. Seems like we still have some respect going on here. On the 4 hours break of structure to the downside, we still have a respect of the upside, really holding on. Nice. And on that upside, we still have a supply zone seated right at the very top. So this is the 4 hours supply zone. Just don't say full supply zone. It has to be tied to the time frame you're looking at it out, right? So this is the 4 hours supply zone. And if I should take a Fibonacci, right? Fibonacci, price hasn't broken above or below this zone. So price is currently within the discount areas of the zone. Do we have a demand area to trade with? In the 4 hours, we do not have a demand area. But we had a supply area where price has already beautifully taken into account. Let's see if that area was good. Yep, that was a perfect area. You can see right here, it is seated right at 50%. That is a good zone anyway. But let's just hope price does one thing for us in this week, right? Break below, possibly slowly, right? Slowly, and finds its way back to this zone with the fundamentals still printing hard sell, right? And then we'll expect the sales to occur. This is what I see happening here most possibly. But right now, because the fundamental is flatlined, we don't have a specific direction. We don't have anything we're looking out for. We're just checking out the technicals to see if we have anything to do. So remember, this has been mitigated, hence this is no longer valid. The only valid zone we have here on the 4 hours is this. And on the demand area, we do not have zones to do anything with. Basically, we do not have anything to do. We go down to the 2 hours. Let's see if we can find something better for ourselves, right? This is where the trading for shorter time frame starts to happen. So for the smaller time frame, we have a very good supply demand zone right here on the 2 hours. So we have a demand zone right here, and like I said, you all know I love Confluence area, right? Confluence area. We do have first and foremost a supply zone right here. This is the 2 hour supply zone. But then again, we also have this beautiful confluence up here on the 2 hours. So basically, this zone is by far, looking more credible to me right now. It's looking more trustworthy in my opinion. And finally, for the 1 hour view, I usually like to stop at the 1 hour. Below the 1 hour, that is automatically scalping, and this is night. We're not in any of their sessions at all. This is Canada against the euro, so we're not in within the sessions. If you want to know the sessions, you simply dive straight to TradingView. Let's go to TradingView. We currently stopped at the 1 hour time frame of the euro to the CAD, and in TradingView, what we want to see is the euro CAD. All right, so we search for the euro against the Canadian dollar. It doesn't matter if it's FSCM or Wanda, whichever one, just pick anyone. The charts are very, very similar to each other. And we'll put in the lower time frame. Now, I do not advise 1 minute trading. I don't know how to do that. Man, that is like extreme for me. So on the 1 hour, this is where we stopped. And we can call up our indicator for sessions, right? Sessions. There's one indicator I actually like to use for sessions. Let's see if I can find the name right here. I think it's ICTQ zones. Is it? No, I don't like ICTQ zones. This is not the one I want. There's one that has boxes, FX, markets, sections. All right, yeah, that's the one right there. So, yeah, right there. So you can see the New York time frame is almost over. Hence, this is not a market you should actually sit in. We're literally entering the Sydney session. Oh, I think we're already in it anyway. Okay, yeah, we just started the Sydney session. This is a session for the Australian dollar and the New Zealand dollar. Most lucratively, this is where you should trade the euro, the New Zealand dollar, the Australian dollar markets. So right now we're leaving zones, areas where scalping is not favorable. My verdict for this market is we need to sleep over this, wake up tomorrow morning, and what are we hoping to see? Let me use a cleaner chart to explain this. What are we hoping to see? Let's use TradingView to explain this. I'm just going to hide this whole statement here, and we're going to just zoom out a bit. So drawing the structure just from bird's eye view, I have, well, I don't like this. Get out. All right, so I have this structure right here. In my opinion, when I pull this chart like this, I have this structure right here. So I have this high to this low, leading to a high that had an obvious low, a quite obvious high again, to an obvious low, then the highest high, a clear low, and to me, this is the last point of contact. Every other thing here is still noise. You can see it's very similar to what the zigzag indicator drew, but this is how I see it. And the last thing we had was a break of structure to the downside, right? This was the last break we had. A clear break to the downside. So if we had a break to the downside, we're dealing with everything right here. You can see how I reanalyze the charts in any market, any day, anytime, the same way. And all we're looking out for is this area. And why are we looking out for this area? Well, we don't know if the market is going to move up, and we don't know if the market is going to move down. But what we hope to see is the market actually pushes below this zone. What we hope to see is the market pushes below this zone and comes back slowly for a good zone, probably even this zone right here. I'll show you the zone before we head further down for sales. It might take a long time. You can see it right here. This is it. Beautiful zone right here. So this is what we're hoping for, right? This is exactly what me personally, seeing this chart, this is what is best to go for in my opinion. But however, if the market decides to hit this and start making a U-turn to this area, you can see we have this area right here. Is that the place? Okay, no, we have it all the way here. So if it starts to make it towards this area instead, you know, decides to touch this, make a U-turn and start heading for this, I personally wouldn't hope for this to hold. I would expect this to break out. Personally, I wouldn't expect it to hold. I would expect this to break out and price coming down for a bullish retest of a bullish zone before it then pushes away. Okay, so that's my verdict on the euro against the Canadian dollar. It seems like we're looking at a situation where the market is quite tricky. There is a bullish zone, a bearish zone on the 2 hours, on the 1 hour, and because we do not have a specific view from the fundamental, the bias is quite mixed up, meaning it could go either way, most likely. But what you're looking out for is your zones. On the supply zones, we're watching out for a choke. On the demand zones, we're watching out for a choke. So if we see price hit any of this zone, performs a choke, we'll trade heading back for the other zone. But if we see price break out of that zone, we'll know that, well, all we're going to be looking for is price coming back up for a retest, and we're going to dive into continue the market structure. So either ways, stay safe, watch the whole thing, and I hope you enjoyed this analysis of the euro against the CAD. If you did, do well to hit the subscribe button, hit the like, and also I'd like to see what you think, what you say about the euro against the CAD. And also one last thing, one comment I want from you. If you have a market you want me to analyze, look through, give an analysis into it, feel free to drop it in the comment section down below. It's your boy Chuksniki, and you're here with the Plenty Talks with Chuksniki. Catch you all on the video I had yesterday. Lots of analysis right there. Do well to hit the button and watch it. Peace.